Good afternoon, good morning, or whichever time you're watching this video clip. Today, we're going to look at accounts for non-profit organization. In this clipping, we're going to look at a few sections. We're going to look at non-profit oriented organization. We'll look at receipts and payment account. We're going to have a look at income and expenditure accounts. Then we're going to have a look at profit or loss for a special purpose and also accumulated fund in this video clip. Please watch and enjoy. Now, first things first says as their main purpose is not trading or profit making, charities, clubs, associations, and other non-profit oriented organizations do not prepare trading and profit and loss accounts. They are run so that their members can do things such as play football, chess, dungeons, and dragons. Rather than producing trading and profit and loss accounts, they prepare what? Either receipts and payments accounts or what? Income and expenditure accounts. So this is saying that non-profit organizations they do not prepare trading and profit and loss accounts. They prepare what? Receipts and payments accounts or income and expenditure accounts. They are not operated for what? Profit. They are run so that the members can do things such as that play football, chess, dungeons, or just games, right? Rather than producing trading and profit and loss accounts. They prepare what? Either receipts and payments accounts or income and expenditure accounts. Now, receipts and payments accounts now are a summary of the cash book for the period. Alright? Cash coming in, cash out, going out. So for an organization with no assets other than cash and no liabilities, a summary of a cash book reveals everything about what has happened financially during a period. Exhibit 36.1 is an example of a receipts and payment account. This is what for Heaven running receipts and payment account for the year ended December 31, 2005. Notice that these are receipts, money that came into the bank. As a matter of fact, this bank balance is what they began with at the beginning of the year in January. Subscription received in 2005 was 11,480, where received was 160, and they paid out groundsman wages, sports ground rental, committee expenses, printing and stationery, and they ended with a bank balance of what? 3,850, which would be the beginning balance for 2006. That is for this receipt and payment account. Alright? So it's about what? Receipts and what? Payments. Cash coming in, receipts, and that cash going out. So you start first with the what? Bank balance or cash balance, whichever one. Normally they have a bank account. Alright? Look at income and expenditure accounts now. When assets are owned and are and or there are liabilities, the receipts and payments account is not a good way of drawing up financial statements. Other than the cash received and paid out, it shows only the cash balances. The other assets and liabilities are not shown at all. What is required is a what? A balance sheet and an account showing whether the association's capital has what? Increased or not. In a profit oriented organization, two would normally have been a what? Trading a profit and loss account. In a non profit organization, two would be a what? Income and expenditure account. Alright. An income and expenditure account follows the same rules as a trading and profit and loss account. The only differences are the terms used. Alright. So an income and expenditure account follows the what? Same rules as a trading and profit and loss account. All differences are the what? Terms used. A comparison between the terminology of financial statements produced by profit oriented and non-profit oriented organization now follows. So for a profit oriented organization, you will use what? Trading and profit and loss account, while for a non-profit oriented organization, the name is what? Income and expenditure account. For a profit oriented organization, we calculate what? Profit. But for a non-profit oriented organization, we calculate what? Surplus of income or expenditure. For a profit oriented organization, we calculate what? We get net loss. So we either get a profit or a loss, but for a non-profit organization, we get what? Deficit of income over expenditure. So it's either surplus or what? Deficit for a non-profit organization. So both these two accounts, they are similar but different. Alright? Why difference? Surplus or deficit, profit or net loss. Alright? Let's roll on. So let's go to profit and loss for a special purpose. Sometimes there are reasons why a non-profit oriented organization would want a profit or loss account. This is where something is done to make a profit. Alright? Again, sometimes there are reasons why a oriented organization would want a profit or a loss account. This is where something is done to make a what? Profit. The profit is not to be kept, but used to pay for what? The main purpose of the organization. For instance, a football club may organize and run dances which people pay to go to. Any profit from these helps to what? Pay football expenses. For these dances, a trading and profit and loss account would be drawn up. Any profit or loss would be what? Transferred to the income and expenditure account. Alright, you will see it as we go along in a different video clip for that purpose. Next, we look at this accumulated fund. A sole trader has a capital account. A non-profit oriented organization has an accumulated fund. In effect, it is the same as a capital account, as it is the difference between what? Assets and liabilities. For a sole trader, capital equals assets and liabilities. For a non-profit organization, for a non-profit oriented organization, accumulated fund equal what? Assets minus liabilities. Thank you for watching this clip. Look forward to seeing the remainder of the clip.